Jim Malone here, coming to you live on Dallas Trading Floor. Well, it was been a roller coaster ride, that's for sure. We're moving up, we're moving down, we're moving sideways. Man, I tell you, it is definitely something that it's definitely hard to trade this one. But I do have some kind of suggestions maybe that might help. I have a little trade that I've been that I did today. It is on a Teledoc, which was a high flyer, and I don't think so much anymore. But anyways, let's just get right into it on the Teledoc trade, and we'll be able to, you'll be able to see this one on the screen. So here it goes for the Teledoc trade. Teledoc for profit in a downward trending market. What I did was I bought and everybody that's watching on TikTok, we're running this on YouTube, so go to this address. Well, thanks everyone for taking a look at that. That's my little spread trade on Teledoc. And the advantage of these spread trades are that you can make money even as the stock is going down. So I just kind of wanted to put that out there for everyone. We have some very nice, also some spread trades that we've been closing for a profit. We have one on Rent-A-Center, and we also have one on Viva Systems. But I'm putting these spread trades on because right now the market is very hard to trade. I'm about 100% in cash on my long positions. Basically, I was stopped out of Tesla today, and I also was out of Rio Tinto. So I'm basically all in cash. But what I'm doing to stay in the market is I'm looking for opportunities where the stocks are going down, and then I'm doing these spread trades. So that kind of it gives you an idea of sort of where where that's going. And you can easily get on the list for the action trade alerts. I'm going to probably put out more stuff on this, but just go to www.dallastradingfloor.com and sign up for our free action trade alerts on that. So that's a great thing to go. And you definitely definitely, I think it will give you some good stuff here. Basically, I wanted to also welcome Ash, who joined the Discord room. This is our paid service, but thank you very much, Ash. And he's our newest member of our Discord room. Now, our Discord room is a paid service, but what we do is we really zero in on the profitable trades. We try to do directionals and give everybody forewarning in that one, and hopefully put out some stuff that people can make some money on. Easy to get on that list, not a problem. Just go to www.dallastradingfloor.com. And if you're looking on the if you're looking on TikTok, super easy. Just go to my profile, and you'll see the links to, right there. Just click on beacons, and you'll see everything that's on the Dallas Trading Floor site. And basically just get on our free extra trade alerts, and then we also have some nice trades for you. We also have a few lists right now because the market is tough to trade. We're building our watch list, and I put out a watch list out there that I think will help hopefully people trade. And so I'm pretty excited about that. And well, anyways, let's just get into a few other things here. The market ended up the day at a slight bounce, which is actually really good because we were down so much in the early trading today, and that's where I closed some of my bear trades. And always when it starts to go down like that, and think it's going to go down, that's a good time to close some of your bear trades. I did put on this on the bear trade on Teledoc earlier in the day. We'll see how that one does, but I closed for some nice profit there. The market is very, very skittish ahead of this, the war footing that we seem to be on in this country. They've got the troops on alert to go into Ukraine. Why, I don't know, but hey, I'm not a politician here, but if that happens, that could be a massive tankage in the market. So we want to be careful. We want to be on those bear trades, and I'm trying to put out there as much as I can. The S&P was up, kind of a dead cat bounce, though. Remember, I believe this is a dead cat bounce and not a legitimate rally. Okay, so be very, very careful. Interestingly enough, when the market pulls back, that's when we get some of the biggest up days, but they tend to be dead cat bounces. So stay tuned to this channel because I will definitely indicate when the market is moving through a follow through day, and that is our signal. I just want to show you this tremendous bounce that we had on the spider, and of course the spider is the S&P 500. And let's just take a look at that chart. Wow, it went all the way down. Yet on Friday it broke through the 200-day moving average. This is a critical level, and I just want to be very clear on this. Today we had this dead cat bounce where it went all the way down, and then boom, it went back up. So what I expect on this is that we may have some more down days here, but we are not out of the woods yet. Very big bounce on this, but still, I do believe that we are probably going to see it go down, down more. Now, the question is, what will happen tomorrow? Who knows? We may get a little bit of a bounce up, but right now the trend is down. So we want to be very careful. This is one of the problems when you're in a market like this. This is why it's difficult to short the market. I want to be very clear on that because you can get these massive rallies. This is why when you're doing the shorting, please heed my advice here. You want to do spreads because that is going to limit your risk to the upside, and there will be upside risk if you do decide to short this market. So just wanted to be very clear, very, very clear on that as well. So getting back to the slides, the S&P is up tremendously. Let's look at the Dow because that's really been the one that has been as of late. And normally I'm not a big Dow Jones guy, but as of late, that's been the leader. And that's kind of where it's at. So let's look at the Dow Jones Industrials here and take a look to see. Basically, same kind of action. We're below that critical 200-day line. We didn't get a bounce on towards the end of the day. We moved up and then we moved down, but we didn't move back up again. So I do expect that this will rally tomorrow, and then it will be unfortunately back to where we're going. I do think that, hopefully we can hold the 200-day line, but if we can't, we're probably going to move below that critical 34,000 level. So just wanted to put that out there for everyone. I want to put that out for everyone. Now on the Nasdaq, that's where all of the tech stocks live, of course, and that is that also had some damage. The key to the Nasdaq is going to be the big tech stocks like Apple and stocks like that. And I want to check in on Apple because that is the largest cap stock right now in the market, and that's Apple. Now, if you have been with us for a while, you'll know that we did have a very nice bear spread on Apple that is really doing very, very well. I hope that some of the people are in it. A good time to close it right now because it's over 80% of its potential profit. So I wanted to put that out there to everybody. But let's take a look at Apple, and that is a key stock. AAPL, of course, is the symbol on Apple. This is where we entered that bear trade on the 13th. I think we can take away some of the. I think we could take away some of the markups here that I did. Anyways, so basically, I do think that it's a good time if you do have that spread on. If you've been watching me for a while and you do have that bear spread, it's probably a good time to close it because it definitely made some profit. And we're seeing in the after hours a little bit of a bounce on Apple. But remember, there's a lot of damage that's been done. We're well below the reversal line, and we're below that 40-day moving average. So right now, the market is weak. So even though it's rallying, this is not a good time to buy. Don't buy on the dips. Please, please, please don't do that. I know that a lot of people out there, in television, in the world of television will say, oh, buy in the dips. This is not a good idea. So it's really not a good idea to buy on the dips. And everybody will say, well, Jim, that Kramer says that, and everybody else says that out there. Not a good idea to buy on the dips. I know that Apple is a great company, but let's wait for that follow-through day. The follow-through day will be the signal to get back into the market. Right now, we want to be all in cash if we can be, or doing bear trades like I'm trying to put out to everybody, where the benefit for the stock going down. When we get a follow-through day, that's when we can come back into the market, and that's when it's going to be strong. So I just wanted to put that out there to everyone. That's kind of the way it goes. Now, in the Russell, of course, it's actually up, and this is really interesting. It closed the day up a little bit, but it's been a very strange market. Even though it says the Nasdaq, it's up 0.36%. I think you got to look at that. I think you got to look at the chart very carefully. Let's look at the Nasdaq chart and take a look at that in the Nasdaq Composite. Yes, it's up a slight bit, but just look at that. It's almost nothing, as you can see, almost nothing. So it just kind of bounced. Most of the day it was down, and I think that's going to be sort of the deal for the rest of the time. So I think we got to be super careful. Not a good time to come back on the market. Don't buy the dip. Really, it's not worth it at this point. It's just not worth it to buy the dip. Because we haven't had a follow-through day, and we are still, and we will be probably for a while now, in a downward trend. So it's right now. Be careful. It is not a good idea to buy the dips. Not a good idea to buy the dips. So you want to be really, really careful on that. What is a follow-through day? Good question. It is technical, and I want to get into the explanation of it. But what I would like to do is what I'm going to do is I'm going to put out to everybody what the follow-through day is. I'm going to put that on the action trade alerts tonight. It's a little bit technical, but and I will indicate it on this channel. But here's the thing that you need to do. You need to go to the list on beacons. Beacons is if you're on TikTok, just go to my profile, click on the link, first and last name, and you will see it. And then we will put out something today on what the follow-through day is and why we want to use it. But basically, it's a signal to get back into the market. Right now, we need to be out of the market because we're in a correction. The correction could be as much as 20%. If you've been watching the channel for a while, you'll know that I've been warning on this for about the last 10 days or so. And I have been putting out videos on this. But now we are in the correction, and even though we did have a bounce today, that is not a turnaround. We've got to wait for that follow through day. That's the critical day. That's going to give us the time to get back into the market. But right now, we need to be out of the market. If you want to get the watch list, and I just put this out there because right now we want to be building that watch list. I have a great free January 2022 watch list. Super easy to get this. All you have to do is go to www.bit.ly/DTF0025. It's all caps, DTF0025, bit.ly, and DTF0025. And that'll get you on the watch list. That's where we're going to look to find the next winners when we have the follow-through day. We don't have the follow-through day yet, but we will be getting to the follow-through day. So let's take some questions. Thank you very much for hanging on, everybody. And David, the first question, super. What is the difference between a sell-off, a correction, or a pullback? Great question. It's really it comes down to the depth, and it also comes down to what lines that we're violating currently. Let's just look at the Nasdaq Composite. We have violated, and this is the key thing from when I started talking about this. We have violated. We have violated the 200-day moving average, and that is a violation. That's called a vertical violation. We've violated that. We've stayed below that. That was the signal. That we were in. Now we could have as much as a 20% pullback. If we did have that, we were up here when it started to pull back. We were right at about 16,000 on the Nasdaq. So if we extrapolate that, we're looking at possibly going down quite a bit. We could easily move down to this level here, which is 13,000. So as you can see, it tested right there. So they could easily move to that level. So we've got to be very careful right now. And we're going to see some sell-off in the stocks probably for the next few weeks. That is a correction. A correction is more than 10% drop, in the price. So that's the thing we've got to look at. So a correction equals, let's just put it in there, a correction equals more than 10% drop in an index. Like the Nasdaq. So basically, that's what a correction is. It's more than a 10% drop in an index like the Nasdaq. That's definitely what we have here. We were basically up here at about 15,000, and as you can see, we're down 150, almost 150 points. So this from here to here is more than 10%. This is a correction. Okay, so what is a reversal? That's a good question, by the way. So the question is, what is a sell-off? Well, a sell-off is it's typically in any one stock. For instance, let's take a look at a sell-off that just happened, and that was in Netflix. NFLX is the symbol there. Let's look at it. Okay, NFLX. This is a sell-off, and they usually happen right before the corrections or right after the corrections. That's definitely was the case here with Netflix. This is a sell-off. As you can see, it dropped below this very critical, and I'm keep bringing people's attention to this 200-day moving average. You can see it couldn't hold it, and then when earnings came out, boom, it dropped, and it dropped significantly. Okay, so we're looking at a drop of approximately, we're looking at approximately a 20% drop. Now, a sell-off is typically in one stock, and that's definitely the case with Netflix. Now, a pullback is a little bit different, because the way a pullback works is a pullback is definitely it's a pullback and a reversal, and that generally happens. So let's look at one that let me see if one that has a pullback and a reversal. Let's look at Nvidia. NVDA, of course, is the symbol for Nvidia. This didn't really have, okay, so I'm just going to show you this one. By the way, I'll probably be doing a short on this one. As you can see, this line here is the reversal line. A pullback typically is it'll pull below this line. And what is this line? Well, what this line is that in order to find out if the stock is making a downward trend or an upward trend, we draw these lines from the highest point through an intermediate point, and that gives us a slope. And the slope here tells us whether or not the stock is moving up or moving down. It was moving down until about December, right, the third week of December. Then it moved into an upward trend, but it couldn't hold it. Then it went into a downward trend, and so far it's been in a downward trend. A reversal typically will come up, and then it will reverse above this trend line. That's a reversal. So just wanted to kind of give everyone an idea of sort of what all those things did. I probably need to make videos on a lot of this stuff, but that's an excellent question, David. Appreciate the question very much. Let's look at Tesla for Samuel here. Of course, the symbol TSLA, and it did come back later on. I was stopped out earlier, and unfortunately, I got stopped out at 900. That's where I had my stop loss. It was right here. It went down to 900. It pulled below that, and then it pulled back up. But unfortunately, just like we indicated here, this is the trend line, and it's now below the trend line, and so it is trending lower. The question is, has Tesla topped? I don't think it's necessarily topped, but I think we could see a basing period. It could come down as low as 546. Now I'm currently out of the stock. We will see if it moves below the 200-day line. Then I think we have to be concerned. I'm all out of the stock because I was stopped out. My stops were set at 980. Those were tripped on Friday, and then 900. Those were tripped today. So I am totally out of Tesla right now, waiting for it to form a base pattern. And that's exactly what happens. The stock will move up to a peak, and then it will start to form a base pattern. And when it comes out of that base pattern, that's many times a very good time to buy. But right now, because we don't have a follow-through day, we can't do that right now. But Tesla, I think if you're down 7% on Tesla, and this is very painful because this is one of my favorite stocks out there. So I definitely felt a little bit of the pain as well. But again, if I'm down more than 7% on any of mine, I just have this strict rule, and that is I'm selling. So if you're down more than 7% on Tesla, consider selling, because you can always buy a stock back. That's not a problem. You can always buy it back. All right, all stocks are extremely overpriced. That is probably true, but remember, you buy on technicals and on fundamentals. If you only buy on fundamentals, then we would essentially never buy anything. So I do agree with you. Can you look at KO? Okay, this is a question from TikTok. Now, KO is the ultimate Warren Buffett stock. I think he's owned it for like 1 million years or something. I'm not sure, but I tell you what, it is Coca-Cola, and even in a depression, Coke sells well. But even Coke today is pulling below. If you'll notice, Coke it looks like it may be topping at about the $60 level. Currently, Coca-Cola, is selling for $59.87. And what happened was it has been able to hold that 21-day moving average. But right now, let's look at the technical action on it. The technical action on Coca-Cola is it's well above its 200-day line, 7.56% above the 200-day line. It's above the 50-day line, about 4%, and it's just barely above the 21-day line. Now, if it can hold the 21-day line, then you want to hold on it. I would not be a buyer here. It just doesn't. The pattern is starting to deteriorate. It's still very good, but there's earnings in 17 days. So KO just would not be a buyer for this right now. Right now, the best hedge right now in the market is cash. Wait for that follow-through day, And then when that happens, that's when you want to go all in. Right now, it's not a time to be an all in. It's sort of, diamond hands are dead right now. So be careful. Be careful. Okay, so let's see. We can't hear the trade on. We couldn't hear the trade on Teladoc. I am so sorry about that, Pradesh. Let me thank you for putting that out. I can probably run that again. Let me see if I can do that. Sorry about that. Sometimes my technical is not as good as I would like it. So I'm going to run the trade now for I'm going to do the trade again for the Teladoc. So this will take a few minutes and then we'll get right through it. So here it goes. Thank you, Pradesh. Appreciate it so much. Here's that extreme again.
That's what I said. Come find me when you're ready and we'll walk through it and see what you want to do.
Oops, it didn't work there. Pulling back, looks like we're in correction. The question is, how can you make money in this kind of a market? Well, I have an answer for you. It's called a bull call credit spread, and I'm going to do it on Teladoc. Teladoc has been a high flyer, but it's very weak right now. Seems like it's retreating. So here's how I'm playing Teladoc for profit in a downward trending market. What I did was I bought a 70 call, and then I also sold simultaneously a 50 call. This was for the March 18th expiry. Now, because I did that, and because the selling of the 50 call is worth more, of course, than the 70 call, there was a credit here. And that's what I put into my pocket right here, a credit of $1,261. Now, this will work out as long as the trend of this is downward. If the trend of this is downward, we should work out with a very good, nice little profit at the end. Here's the weekly chart of Teladoc. As you can see, it's been in this downward trend. This is where I entered the spread. By the way, it has a relative strength of 6. That means that 94% of all the stocks are higher than this one. So this is really bleeding, and it's probably moving lower. Hopefully, I'm right, and it will move down. And if it does, of course, we will keep the entire $1,261 credit for this trade. Here's the recap for this trade. Our entry credit was $1,261. We do have a maximum risk of $730 if Teladoc moves above 70. The maximum return, of course, if we keep this credit, is $1,261. That would be at the expiry, which is on March 18th. And then the break even on this one is $62.61. So if this thing stays below $62.61, we will keep all of the money on the expiry, which is March 12th. If you like these kind of trades, tune into our show every day at 4 o'clock on TikTok or on YouTube. If you'd like to find out more, go to this address below, and you will be signed up for the Action Trade Alerts. This is free, and you'll also be able to take a look at the deck on how we trade this. So I hope that worked, everyone. Sorry, sometimes I have these technical issues, and I don't get everything all right on that. But I thank you for bringing it to my attention so much. All right, so let's take a look. What happened today? Is it time to go long? Not yet, Derek, but you're thinking the right way. Basically, we want to wait until the follow-through day happens. When the follow-through day happens, that's when we want to go all in. So right now, the critical thing is to build that watch list. And it just because I'm building my watch list too, to share it with everyone, I have a way that I can get that to you. So it's super easy. Let's go. Let me see if I can get back to that to that one. There we go. Okay, so if you want to get that watch list that we have, this is the January 2022 watch list. This is where we're going to see the winners appear when we have that follow through day. So it's super easy. Just go to www.bit.ly, bit.ly/DTF0025. Thanks for that question. Really appreciate it. Okay, so I think you're smart for being in cash, but we're going to have some opportunities, Derek. So just hold on to your cash, and we will have some opportunities to get back in the market. I think there's going to be a correction, about 20%, and then when it fall through day hits, It'll be excellent. Are you expecting the drop to be about $50 in Teladoc on the spread trade? Well, let's take a look at that again. That's TDoc. Teladoc, of course, is the symbol. So let's look at the stream here and see kind of what we're talking about. I do expect, and here's sort of how I came up with the idea here. If you draw a line, and I'm just drawing a line, you'll see this, it has this slope, and then currently we're at 75.20. We had a little bit of a dead cat bounce because as the stock goes down, it'll go down and then it'll pop back up and then it'll come back down, but it's essentially trending this way. We want to go out to the March 18th expiry. So what I'm doing is I'm just putting my little pointer on that and kind of looking to see. Now it's going to be all the way out here, but I'm looking to see kind of where that's going to be. So I'm going to track the price, and unfortunately, well, let's see if we can go into the future here. This is kind of not the Wayback Machine, but it's the forward machine. I don't think I can go any further than this. No, I can't. But if you look at this slope here, you'll notice, and I just kind of eyeballed this. You'll notice that we're probably looking at a price that is significantly less than 74. I'm saying it's going to be at about 50 to 55. That's where I'm looking to see it go. So I'm actually looking to see it go a little bit down from here. But let's we can bring up the deck to take a look to see exactly how we're looking at that. So let me bring up that deck here and see if I can put that to see if I can get that up for everybody here. So let me put up the deck for the for this trade. This is the trade on Teladoc. This is the actual deck. So let me put up the deck here and see if we can get that up. There we go. Okay, so hope it's processing. Takes a second or two for it to get all the way in there, Samuel, but hopefully there we go. So we're going to add this to the stream. We're going to take a look at the deck and see. Let's see if I can put my camera back on. There we go. Oh, that didn't work. Oh, too many controls. Let's see if I can start the cam. There we go. We're back. All right. So now let's see take a look at this. Basically, the way I'm looking at this, Samuel, is this is the slope I'm looking at here. Basically looking for a drop to the 50 level. And the reason, of course, is that slide that I just showed you. This gives you kind of the look. So I am looking at, approximately a $20 decline in the Teladoc stock by March 18th. So that's kind of how I'm looking at it. Now I can adjust this trade if need be, but that's the slope that I'm looking at. Of course, it'll pay all the money when it gets to that level. So thank you very much for that. Hopefully you're signing up for that trade. I think it's potentially a good trade. We will see. And of course, I'll keep you updated on it as well. So I'm expecting a drop of $20, not $50, but about $20 on that. Okay, so we talked a little bit about Tesla. Let's talk about M. And M, of course, is Macy's. And let's see if I can get Macy's up here. And let's take a look at Macy's. The department stores have been kind of pulling back, but we did have this nice bounce today. And definitely came all the way down to that 200-day line. And then, boom, it just bumped. It moved up very, very nicely up to the 40-day line. So that's sort of a potentially change in direction. We're still in a downward trend. I'm going to show you that right now. This is the reversal line that I'm going to set an alert on. And the reason I'm going to set an alert on it is we put this line in here to see if the trend is down or up. It's just peaked above that trend line. Would I buy this here? Probably not. I would not buy Macy's here. I'd be very careful here. You might want to push up your stop loss just a little bit, because I do expect we're going to have some bad news when the earnings start coming in for the retail, because I don't think it was a very good I don't think it was a very good season this year. Earnings for Macy's is going to be on the 23rd of February, and I don't think it's going to be that good. I just don't think it's going to be that good. So I would be very careful with this one. And as I always say, and this kind of broken record time, but if you're down more than 7%, you really, really want to consider possibly, going into cash, waiting for better opportunity, and then coming back into the market. I like to do this because you can always buy a stock back. So if you're down more than 7% on this one, consider selling, just because that way it's gonna be a better situation all the way around. Let me take a look at Wall Street doesn't care about America. That is true. That is absolutely true. Let's look. Is AT&T a buy? Absolutely, positively no. AT&T is one of the zombie stocks. It's been around for about 130 years almost, I think. AT&T is a terrible stock, even though it is based here in Dallas. It's a wretched stock. Let me just show you, and I want to show you this. This is kind of frightening when you think about this. This is the stock since 1994. If you went and you bought some shares, you thought, well, I'm a smart guy here, I'm buying some shares, and you bought them way back here in, well, so let's look at 1995, and you held your shares, guess what, folks? You wouldn't have made it back. And this is the poster child for a dead money stock. And what do I mean by that? Well, what I mean by that is this: if you bought AT&T way back here in 1995, you would have paid. And let's take a look at this because I want to just show you this. If you bought it way back here in 1995, you would have paid for this stock $30.13. Well, guess what? Today it closed at $26.34. Well, what does that mean? Well, that means that you held it for how long? Well, let's look. Almost 30 years, 25 years. In 25 years, AT&T has lost $4 a share. So you don't want to buy it. Is DAL a buy? Absolutely not. But I do have another alternative for you on DAL. I have a bear put spread on DAL. So let's check in to Delta Airlines. Now, Delta and all the airlines are going to do very poorly because of the increase in the price of fuel. So right now, the price of Delta is $37.38. So let's just kind of get that price, $37.38. There we go. And what I'm going to do here on this is I'm going to bring up I'm going to bring up a trade that I have currently on a trade I currently have on Delta Airlines, and what I'm going to do is I'm going to bring that up, and I'm going to kind of show you if you did this bear trade, how whether you'd be up or down or sideways. So basically, I'm going to look here for Delta Airlines. This is the bear trade that I put on that I shared with everybody. So let's put that up. What I'm doing is I'm going ahead and I'm entering it into the system here. It takes a second for it to process for everybody on YouTube, but I think this will be of interest to you. This is a bear trade. This is one we did a few days ago, and it's taking a little bit of time to process it, but it'll have it up here in just a second. There we go. Okay, so basically what we did is we did this bear trade on the 19th. That was just a few days ago. And what we did when we entered this trade was we bought the March 18th 40 call, and we sold simultaneously the March 18th 35 call. The spread was 5, and we put $924 in our pockets. Now the question is, how well are we doing on this trade? Well, let's take a look. We have to look kind of at the trade here, but currently the price of Delta Airlines is $37.38. So if this is correct, we are right about here. So we actually, if you look at this, and I don't know if you can see this slide, let me pull it back one more. If you can see that slide, you see this was the prior price, 23.28. We have now moved to the price of 37.38, which means that the actual fair value of this trade currently is approximately, and if I can read it here, it's just over $142, and that was made basically by this trade in let's see how many days that was. Well, we opened the trade on the 19th, and it's the 24th today, so that's basically in 5 days. So you can make money on these spread trades. So what I will say to you, basically, if you're looking to buy Delta Airlines, the stock, don't do it. It's in a downward trend, even though it went higher today. But with the spread trade, with the bear call spread that I put on it, that will earn you money. It's below that magical. It's below that 200-day line. It's below the 21-day line, and it's trying to hang on to the 40-day line. What's going to happen is we're going to see a rally up to this line, and then it will collapse even further. So this is likely to be a very good trade for Delta Airlines. So that one might be one of the ones you want to look at. And I'm going to be trying to put more of these spread trades up. This is how you can make money, even if the stock market is going down. All right. Thank you, Derek, so much. I'm a newer investor, 5 years. Well, you're not that new. That's a good play. And the correction seems scarier than all the ones I've seen, including 2020. How do you rank this in your trading career? I actually lived through 87. That was the mother of all corrections. I also was around in 2000, if you can believe that. God, I'm really dating myself. I'm an old guy now. God, I don't think of myself that way, but I am. I see this one as potentially fairly bad because we have this big bubble. But you know what? This Fed keeps kicking the can down the road. Here's the thing, and I'm going to say this, and you're not going to believe me. Here I am, all excited and happy. The reason I'm all excited and happy is because I typically do well in these corrections because it allows me to do these spread trades. It also allows me to enter stocks at a really good time. So don't be afraid of this correction. Here's the thing I want to be very clear on, though. You want to be mostly in cash. I'm basically 100% in cash, but I do have these spread trades that make money as the stock goes down. So you want to be in cash. You really don't want to be long anything. I know it's tempting to buy Tesla on the bounce, but no, you want to wait for that follow through day. Very, very good. Very, very good question. Thank you very much, Derek. Appreciate it. Will you look at the fundamentals of Volkswagen? And this is Volkswagen. I can look at the fundamentals, but it's going to be traded on the. Here's the thing about fundamentals and technicals. What I'll do is let's take a look at the fundamentals for Volkswagen. That's VYG VF. And of course, this is traded as an ADR. I think that's right. Is that right? VYG VF. Is that right? Did I get that right? VYG YF. Well, I didn't think I got that right. Let's get Volkswagen up here and get it correctly. Let me see what the Volkswagen symbol is. And what I'm doing is I'm just looking that up because I don't remember it offhand. It's Volkswagen stock symbol. Let's look at that. Okay, that is, okay, VYAGY. Sorry, I had that wrong. VYAGY. Let's do that. Put that up there. I think that's the one you want. I hope I'm right. VYAGY. And that should give us AGY. Why isn't that giving me the correct one? It isn't. For some reason, I don't know why this is. Volkswagen stock symbol. I'm just going to copy this. This is over the counter market. See, this trade's in Germany, so that's the issue. It trades on the Frankfurt Exchange, and so we have to put in the ADR symbol. Oops. Let's see if that will let me. Okay. Okay, there we go. Finally, we have the Volkswagen. We have the Volkswagen chart. Here we are with the Volkswagen chart. This is the ADR. One thing I want to show you is that we're like almost all the stocks right now, because we are in this correction, we are below that critical 200-day line. So we really don't want to buy it here. We're also below that 40-day line, and we've fallen below that. We've lost traction here. We're probably going to get a movement on Volkswagen down to, I'm guessing, about 22. That's where I'm looking at. That's where I see some support. Actually, there is a consolidation base on this one, so I see strength at 2035. So this one has a long way to go. This one could easily move down from 28 to 20. Easily. So that's where I see some support on Volkswagen. Now, let's take a look at the fundamentals. I showed you the technical analysis. Let's look at the fundamentals, because that's the important thing. Fundamentals are going to show us what's going to happen about 6 months out. So let's take a look. We just had earnings, and the last earnings were in September. We had a decrease in sales. This is not good for a automobile company. This is decreasing in sales. 5% drop in sales in the third quarter, 2020, in the last quarter. Sales were down 5%. Profits were up 7%. That's good, but I don't think that's enough to move the needle on this one. We're going to have earnings reporting on the 15th of March, so that's coming up. That is coming up, but we're still fairly far out here. What I'm guessing is, with this trend, we're seeing it move lower. And here's another thing that is a little bit frightening. We only have 13 funds in this stock, which is amazing considering how large a company Volkswagen is. I kind of want to give you an idea of who owns Volkswagen. Actually, it's mostly a German state of Lower Saxony that is the largest shareholder of Volkswagen. So let's take a look at who else owns them. These are funds. Most of these funds are C- plus funds. They're not the best funds. So really, even though Volkswagen is a huge company, it is obviously, at least in terms of the way that it's looked at from the funds, it's not the premier automobile manufacturer right now. Let's take a look at the automobiles manufacturer group, and that will basically tell the story. So it's 15 out of 197. I know this is getting kind of technical. I'm sorry to be so obtuse on this one, but I think this is a very good question, and it definitely is important to take a look at kind of where the autos are in terms of their ranking. Currently, right now, the automobile manufacturers have moved up somewhat. Last week they were 10, but this week they're 15. So we have a dropping sector in the economy, in the stock market. Currently, the top stocks are still are basically Toyota, Ferrari, Stellantis, and Tesla. Unfortunately, Volkswagen, which is the VYAG, as you can see, its market cap is I say only $41 billion. Obviously, Tesla is worth almost $1 trillion, just slightly shy of that. Toyota is worth about a third of what Tesla is worth, or about a third of $1 trillion. Everything else is lower than that. BYD, this is the Chinese EV maker that Warren Buffett owns a piece of, trades in Hong Kong. It is the third largest company. It's ahead of Daimler and then ahead of Ford. So that's kind of the situation right now in the autos. Tough market to trade. I don't think Volkswagen is the place to be in the market. And if you're down more than 7%, do consider selling it, because you can always buy it back. So just wanted to put that out there. Tesla going to 5. It might happen, Tony. And if it does, it's going to be a tremendous buy because I think long term, Tesla is going to be awesome. So, but I'm not in it right now. Thoughts on IBM? IBM showed some good numbers today. IBM showed some good numbers. That would be interesting if IBM came back from the dead. I'm not holding my breath though. It's had a long decline, and unfortunately, if you look at the chart, it's not that promising. I hate to say that, but International Business Machines, IBM, it's up a little bit after ours. They had some good earnings, up about 2%, but this is really a dead cat bounce. In my opinion, we have a trend that is downward. I do think for the next few days, it may be able to retake the 200-day line, but we've got a lot of selling going on. Of course, this is not showing the blue bar that probably will happen on tomorrow based on the earnings. They did have a very good earnings report, and but I don't know if it's enough to stem this tide. Remember, we're fighting. It's hard to swim against this tide. The tide is pulling out, and we're trying to swim against it. Not a good thing. Tough place to be. Let's look at the fundamentals on IBM and take a look there. I don't see. Yeah, their earnings per share, and this is very interesting. They just reported up 78%. So, but here's the thing. Their sales are absolutely flat, as you can see. When you're buying a company, typically you want to see growth of 20% sales growth every quarter. If you can do that, you're in a winning company. Unfortunately, this is a more mature company, and IBM just doesn't have that kind of numbers. As you can see, they're basically, their sales growth is anemic. They were basically flat. And they're paying a nice dividend, which is definitely, the market is looking for that right now. But as you can see, it's not working. And so the thing is, if you're looking for a stock that's if you got to be in the market, if you got to be invested, if you're looking for a sort of a safety place in the storm, I'd recommend Altera, Altra. I think that's it. I can't remember. Altria. This is old Philip Morris. This is a tobacco company. This does very, very well in pullback. So let's see if I can get a symbol for it. ALTRA. I think it's that stock symbol. Let me see if I can bring that up on the screen. There we go. Let's see if. No, that's not the right one. Let me see if I can get Altria here. Let's see, Altria. Let me see if I can bring this up for everyone here. Okay, Philip Morris International. Oh, okay. So it does have that. Interesting. Interesting. It's down a little bit today. Stock symbol is PM. I haven't looked at this one in literally years. Let's see. But I do think if you're looking for a kind of a place to weather the storm, the tobacco stocks do well when the market doesn't. And it does look like a little bit of a pullback here, but actually this is a pretty good pattern. It's up today. Yeah, it's right below this 106 buy point. So even if it's got a cup handle, 106. People are liking this. It's pulled back here. This is actually a very good pattern. It's a cup without handle, and considering the market this is spectacular. Relative strength 86. So this might be an area that if you got to be invested in the market, I'm probably not going to buy this one, but if you got to be invested in this market, it's above the 200-day, 50, 21-day, and just slightly below the 10-day. This is a very good place to buy it. Checklist is decent, 67, not stellar, but not bad either. On the pattern rec, we're basically 6% to the pivot, not a bad place to buy it. This sector is not exciting. Tobacco, 64 out of 197, but this is a cash cow, like you read about. This is the stock that you can't kill. This basically, if tough times, when people get, tough times, they smoke a lot, and it does well. So This is one if you want to stay in the market. I'm not in it. I don't really believe in buying these kind of stocks, but boy, I tell you, if this market pulls back 20%, then this is going to do well. Just the way it is. They actually acquired a pharma company. I'm not surprised. This is Philip Morris, and it is profitable. And even if the world is, even if we're going to war and the world's coming to end, they probably will be selling cigarettes. So not a recommendation, but a good stock if you want to be in the market. I'm not currently in the market. I'm sort of pretty much out in all in cash. All right. Is Palantir a buy? No, I don't think so. Palantir right now just not a good time to be in the market, just because we have this correction. When the correction is over, it'll be time to buy again. But stocks have their seasons, and right now, that this is not a good season for Palantir. Let's take a look at it. It's probably going to be a short. I think I may do a bear spread on it, based on what I'm seeing. I don't know. There's not a lot of meat on the bone, but those could be very good. It's currently now, it IPO'd at 725 and currently it's 13. So this could easily lose half of its value. And this might be a good, actually, this is a good short. I may be a short on this one, down, maybe to 10 or so. Currently 13.39 for Palantir, PLTR. A lot of funds are in this one, and they're going to have to go for the door. So the value of puts is likely to go up. I wouldn't recommend selling naked puts on this one, because we may see some dead cat bounces. But if this thing can pull up to the 10-day line, I might be interested in doing a bear put spread on this one to see if we can make a little bit of money. But not a good time to be in Palantir. Just not a good time. Not a good time right now. All right. Yeah, we possibly could use a diagonal spread. That's a very good point. Appreciate that very, very much. Well, I am almost out of time. Let me take some more questions from TikTok, because I've been kind of being a little bit stingy on that. Let's look at Oracle, and let's take a look to see ORCL is the symbol for Oracle. Let's take a look. All right, Oracle Corporation. Well, I wish I had better news for you. I've just been negative today. Negative Nelly. Boy, not the way you want to be. But this one is pulling up after a retreat. I suspect this one's going lower, just based on this chart action. Let's take a look at the tech. Let's take a look at the fundamentals. We did. We are going to go through earnings here in the 10th of March. We've had some nice growth, but not really enough for a growth stock. But the profits are nice. I mean, this is just a slow and steady wins the race. We have nice cash flow, but we're in this terrible, we're starting to be in this correction. Not necessarily a good time. Would I do a bear call on this one? Well, yeah, it seems like it has lost its support. Let's see if we can see what the lower support level is, and that's about 84.99. So we're at 83. So we've definitely below that, even with the rally. So I suspect this one probably will go lower. That's my guess looking at this. But we did have a nice bounce here. I would not recommend this one. I don't think it's a good time to go on Oracle. And the last one is Nvidia. This is a stock that I've been long on this one, and I'm looking kind of to go to the short side a little bit. And to see if this one is worthwhile shorting. The advantage of doing that on a stock like this is we're right at a support level. I want to show you that. There is a support level right here at 230, and we're currently at 232. So we're right above that support level. If it breaks the support right here, which I think it might do, it went all the way down, it came all the way back, this will go lower. It will go back down to about 195. That's kind of where I suspect it's going to move to, probably by March 18th. And then I think we'll probably get some, we should get some support. The first place we're likely to get support is at the 200-day line. But if it falls below the 200 line, like I believe, I think that the next support level is at 195 for Nvidia. So that's how I see it. as it stands right now. Well, I tell you what, I'm going to be back tomorrow at 4 o'clock. And if you want to get on the action trade alert, it's super easy. If you're looking on TikTok, just go to my profile, click on that link. It says Bacon's first and last name and an email address, and we will get you on the list. If you are looking on YouTube, thank you very much. You can also get on the list. Super duper easy to do. All you have to do is go to www.dallastradingfloor.com, and it brings up everything that you need just to get on that action trade alerts. I'm going to try to put out a watch list for everyone. I don't know if it'll come out tonight, but that's what we need to be doing right now. We need to be in cash, and we need to kind of get starting on our watch list, because when it does turn, when we have that follow through day, then we want to jump into the market, but we want to have a good watch list. Good watch list. I'm going to try to put out a watch list for everybody tonight. Hopefully, I'll get it done. But you need to be on the action trade alerts, and you can do that easily by going to www.dallastradingfloor. Well, as always, it's a pleasure to do this show. And one last thing that I would like to ask everybody, please, just like everybody else, give me that like, and that helps me. Get out to more people. We're getting out to a lot of people, and hopefully we're making a lot of people some good trades. That's the whole idea here. We're trying to solve the money problem, and we're trying to show the best trades that we can, but you need to like it so that I can get it out to more people. So super appreciate everybody that's watching the show. I'll be back tomorrow at 4.